Okay, awesome. We're recording. And the first thing that I want to say is that I pray that my internet does not mess up midway the call. But yeah, I'm going to share my screen with you guys. And the whole point of today's call is to review every single trade that we had this week, right? So if I look at my calendar here on my phone correctly, from Sunday, which is the 15th, all the way to perfect right here from Sunday the 15th all the way till today. Basically every single trade I send out and what time did I send it out, and we're going to be reviewing that trade. That's the whole point of today's call. So June 15th, Sunday, 7:09 p.m. Eastern time, we bought US 30 at 42,160. Now we're gonna go on to TradingView, bring on US 30 full chart, and we're gonna go back to that day. So we're gonna go back to June 15. And this right here is where I bought into the trade. So we're going to look at the exact time. The time is 7:09, 42,160. So we go back here. And right here is where we bought. Around this area. Right here. Let me go on to the 5-minute so I could show that more in detail. $42,160 right here. 19, which 19 is 7 p.m. So we bought the market right here. 100 point, and we will extend this all the way to this area right here to where it finally hit take profit. So why did I buy into this trade? Without marking anything out, the first reason that I bought into the trade is very simplistic. If we look at this market right here and we remove this, this is the trade right here. We're going to go on to the 15-minute to use less candles for the example that I want to create. But if we look at the trade right here, right, the first thing that I want you guys to notice is this area down here and this area up here. It's very important to notice these areas because a market, as we're typically taught, always goes what? Up and down, right? It goes up and down, or it goes up, down, right? Regardless if it's moving up and down in an upwards trend, downwards trend, or consolidation, a market typically moves up and down. So the reason I say it's so important to notice this up here, previous market, is because this resistance right here is a good indication of where the market could go up to. And then we saw right here, down here, a big extension towards the downside that left a huge gap, right? Once a market, right, if a market has a gap and the market comes back to fill in the gap, the market's going to continue moving towards the direction that the gap was filled. Very important. If the market has a gap, right, and the market comes back and fills in the gap, as you see in this example right here, the market will then typically continue to move in the direction that it filled in the gap. Now, does this happen 100% of the time? Absolutely not. But it happens out of 5 times, 4 times. 4 out of 5, it typically happens. So we see here a big extension to the downside. The market, right, after this extension, instead of having another bullish candle, what did it have? A bearish candle, which is very important to hint out because since it was a bullish candle, not a bearish candle, it's a good basically demonstration that sellers have lost control, have lost strength in the market, therefore buyers are going to ultimately take control. And then you see with the buyers taking control, it fulfills the gap. Once it fulfills the gap, it comes back down to have a retracement and then goes up. And then it comes down. And the reason that the market right here doesn't move so fast is because this is the Asia session on a Sunday. Don't expect US 30 or any index to move fast during this session, particularly on a Sunday at this time. It's just not going to happen. I understood that taking this trade, we were going to hold it throughout the London session, because in the London session for indexes, typically the volume starts to pick up. So right here, we enter the market, market goes up, market then comes down, then market at 1 in the morning, pre-London session, breaks towards the upside, hits take profit 1, and then at 2 in the morning Eastern time, the market really breaks up to hit take profit 2, which was during the pre/starting London session. And as you guys can see, where does the market head up to? The market heads up to this area right here, resistance, resistance, and boom, surpasses resistance. So it's a good indication of, okay, where am I trading in the range? Have you guys ever heard that saying, trading in the range? Where is my range? This is my range right here. I'm at the bottom of the range. If I'm at the bottom of the range, I want to buy up in the range. If I'm at the top of the range, I want to sell from the top of the range. So that's a good description of the first signal that I send out this week on Sunday that hit take profit 2, and this signal puts us up 200 points. Now let's move on to the second signal that I sent out, which was right here, June 17, right? And this signal I send out a buy at 8:30, 8:29 in the morning Eastern time. So we're gonna go to June 17. Scroll, and we're gonna go right here to 8:30, right, where we had some drawdown. But right here, June 17, 8:30, boom. We bought at 42,330. The stop loss is right here. And this is right here where we hit 200 points in profit. Okay, so we see here in this example that the market has then come down from breaking its resistance. It came down to go up, to come down, to go up, to come down, to go up. Why did I decide to buy instead of sell if we're trading in the range, as I said? And if you're at the top of the range, you sell down. If you're at the bottom of the range, you buy up. Why do you guys think that I decided to buy rather than continue to sell? Because you see here the market went to the top and sold so nicely. So nicely the same day. Basically 4 hours after we bought, the market then sold down perfectly. If anything, 3 hours, because it started at 11. But I'm going to go on the Discord open chat, and you guys could type in, why do you guys think I decided to buy there? If you guys want, you could type in the pro chat or in this chat right here. Preferably the pro chat would be nice, so I could just read it there. Is it because of the second high? Yeah. That could be a good. Check it out. Why did I decide to buy here? Look at the market. Look at the range, okay? The market comes down. Where's my path tool? Path, okay. Market comes down. Let me move the market a little bit right here. Okay. Market comes down. Market goes up. Market comes down. Market goes up. Market comes down. Market goes up. Market fails to come down. As soon as I saw that the market failed to come down and create a lower low, and the market went up and then came down again and again failed to create a lower low, this is where I knew that this signal was going to be golden. Now, I thought originally that the market was just going to shoot upwards, right? And that would resemble a double bottom. a Forex pattern that is knownly and widely used. Everyone, if you do not know what a double bottom is in your trading, you should stop trading and go look up what a double bottom is and understand the context behind it and how to enter it and how to exit it correctly. But I thought this was going to be a double bottom. I mean, look at the setup. Down, up, perfect, goes towards the upside. But instead, the market, as you guys can see here, I'm going to zoom in a little bit more. The market had the double bottom, absolutely, then came up, right, and then came down for a retracement. Once it came down for the retracement, the market then moved up towards the upside and hit take profit too. Now, is it common that in Forex patterns there's retracements? And, well, yes. Is it common that in Forex patterns there's retracements? Yes, absolutely. In almost all Forex patterns, the retracement is typically the confirmation that you want to enter it. So there's two different types of areas that you enter in a Forex pattern. We're going to use as an example here the double bottom, since that's what we're looking at. So we're going to use the path tool, double bottom, right here. Typically, we're taught that this is the first bottom, this is the second bottom, and up here is basically the necktie, right? Once the market surpasses the necktie, right, there's two areas to enter here. Typically, the first area that people would tell you to enter, and let me grab a trend line. Is it a trend line that points? No, it's not this line. Where's the line that points? Boom. Typically, people tell you to buy right here in this area. That's the area that people would tell you to buy. Right here. Typically, right there. Right? The problem with buying there is that, in my opinion, and there's nothing wrong with buying there, but in my opinion, what if the market does this and doesn't break past the neckline? Well, you just bought a market at its highest point with a whole range to come down to. So, should you buy in the middle of the Forex pattern without the Forex pattern being fully completed? That is really a decision that you have to make based on the trade that you're seeing and based on, most importantly, the volatility of the market. Does the market have enough volume to break past an area of resistance? Because at the end of the day, this right here, one touch, two touch, formats resistance. After the resistance is broken from the Forex pattern, then you see the movement, obviously. But that's something that you have to decide based off different confluences. Confluences is a lot of different confirmations that a market's going to do what you predict that it's going to do. So I typically like to buy up here once I see a breakout. Once I see a small breakout, any type of breakout, to be honest, I like to buy, right? The reason I like to buy right here is because if there's a breakout and then the market comes back down to retest, right? Where do people typically buy when the market retests or has a retracement? Right where I bought. Now, does a Forex pattern have retracements in them? A lot of them do. It's really, really common. So the reason it has a retracement is because it broke from the resistance, it creates a new high, and once it creates a new high, it comes down to have a retracement. Once it has a retracement, it uses the previous resistance as new support and then continues to go up to create a higher high. It's very basic to understand, but in the middle of you being in the trade, if you're not sitting down and going over these things step by step, it's going to be hard to understand the context behind the market. This is why it's so important to have a clear mindset before trading, so you could understand what's going on and how it's going on and break things down step by step. Don't just look at a market and say double bottom. No, you look at the market and you understand, okay, why is it forming the double bottom? From the double bottom, where could the next retracement be? From that retracement, where could the market head to? From that retracement, did the retracement break past my resistance, which is now new support? Did it break past the support? Because if it broke past the support, maybe it's just faking it, and maybe the market would then come back down. So these are a lot of different things that you have to look at when you're trading. It's not just looking at the breakout, it's looking at what comes after the breakout. Because in trading, in my opinion, the two most important things is where are you entering and where are you exiting? Simple. Where are you entering the market and where are you exiting the market? Those are the two most important things in trading, besides obviously the psychology that you have when you enter the market and when you exit, and the risk management principles that you apply whenever you're entering a market. But right here, if we draw out the same exact example, double top, right, retracement, and then boom. And then if we use the fib retracement from top to bottom, from bottom to top, we had a retracement at 0.61. Perfect retracement, market blew up. When I say blew up, I meant went towards the upside, didn't blow up actually. So this is how we hit 200 points here, right? Now, let's go on to the third trade of the week. No video again. What do you mean? Like, it's live recording. Let me know if you guys could see it now, but you guys should be able to see it. But yeah, text it if you guys can't see it. Regardless, I'm recording it for YouTube, so you guys will be able to see it there. Now, we move on to June 18, where on June 18, I send out a buy on US 30 and a buy on NAS 100. Two different charts, two different instruments. Now, I send out the buys at the exact same time, 8:01 for US 30, 8:02 for NAS 100. We're going to start off with US 30 and from US 30 switch over to NAS 100. On June 18, like I said, we bought US 30 and we bought NAS 100 at the exact same time. And something that I want you guys to notice is that the whole week I've been buying because the market has been bullish. Now, 42,240 is where I bought US 30, and I bought it at 8 p.m. exactly, right here. So we go here, 8 p.m. June 18. June 18, this is a little bit, this should be right here. We bought the market right there. We have our stop loss right here. And the first thing that I want to hint out is what is going on here in the market. So we saw that the market basically from this signal came down to hit the bottom of the range, which this is really a triangle, then goes towards the upside, hits this area of resistance, this area of resistance, this area of resistance, comes down and does not touch the bottom, touches this new support here, then goes up and does not create a new resistance, meaning it doesn't break past this level right here, this line right here. It doesn't go up to resistance, then comes down, then goes up and tries to break through, but as you guys can see, let me lock this. Fuck, I didn't mean to delete it. Let me lock this. As you guys can see, goes up, fails to go up, comes down, hits this area right here, this triangle, this line, I'm gonna draw the line black, then hits this area of support, creates a long wick, and once it created that long wick, I'm like, you know what, we are golden. The market's gonna break towards the upside. Boom, broke up, hit its first take profit, and then boom, continues to break to hit its second take profit. This trade was basically trading a breakout from a triangle. Now, what is trading a breakout from a triangle? It's very simplistic. We have here a triangle, and we have a market that is within the triangle. So there's the triangle. We'll start the market here. It goes up, down, up, down, up, down, up, down. Then it gets into this area, and then it basically ranges from resistance to support until it compresses so tightly that then there's a breakout in either direction. Now, something that's very important is when the market breaks out, the market's going to break out with a lot of strength. Typically, it breaks out with a lot of strength 9 out of 10 times it breaks out with a lot of strength. Now, this is something that I don't think has been taught out there. What happens when the market breaks out of a triangle, right? Again, it breaks out with strength. But what happens if the market reverses and comes back the opposite direction? It will come back the opposite direction with double the strength that it broke up towards the original direction. So if it breaks towards the upside and then comes back down, it will come back down with double the strength. Meaning, if it breaks up, as an example, let's say it broke up 100 points. It will come back down at least 200 points. It will come back down with double the strength, which is very important to know in case it breaks up and you think it's going to hit your take profit and then the strength starts to die down. Look for an exit or have your stop loss at a proper place so you don't lose out all of your profits. So that was the trade there, and then NAS 100. We go to NAS 100, and this is the trade here on NAS 100. Let's put this in the proper place, which is right here. Again, here for NAS 100, we bought here at 8 p.m. The market came down, hit this area of support first before leaving the huge wick. Then once it hit that area of support, I'm like, oh man, where's the next area of support? As you guys can see, there's support here and there's a gap right here. The market from this resistance broke up very nicely. Since there's resistance here, there'll be new support here. The market then hit that level of support, left the huge wick, right? And then went up super nicely to hit take profit 1. Got very, very close to take profit 2, but did not hit take profit 2. And then the market came down, but we secured take profit 1 on this trade. Now, that puts us up from June 15, 200, 400, 600 with US 30, and then 50 with NAS 100, 650 points. And then today, I send out a signal that I told you guys to close early that basically only hit 30 points in profit, but this puts us up 680 points for the week, and we're basically 5-0. We won 5 times and we didn't lose a single trade. This right here, I'm not going to consider it a win. Actually, we did win, but I'm not going to consider it a major win. We only won 30 points, but I still want to review it, which was today's trade. So we go to the market, and this is NAS 100. You're going to see that the market's broken down nicely. But check this out. We're going to go into the 5 minute so you guys could really see why I told you guys to close out early. 2 minute, for example. Okay, so we're here. I send out the trade at, I believe I send it out at 8:30, right? Let me see the exact time I send it out. I send out the trade at 9, not 8:30. I got confused with the previous trade that I sent out at that time. So at 9 a.m. Eastern time, right? So if we scroll, this is exactly where I send out the trade. I send out a sell at 9. Stop loss up here. Extended. 100 points. The market basically consolidated, hit this area, and then broke towards the upside to break down, to break towards the upside, almost hitting our stop loss, and then broke down. Once it broke down, when it got to this area right here, where is 42,300, I told you guys close early. The reasoning I told you guys close early is because we see that the market, right, on the 5 minute, I was looking at the 5 minute when all of this was going on, we see that the market, after coming down right here and hitting 300, I saw that it left a huge wick because I saw it came down to then go up, and as it was going up, I told you guys close early. Once I saw that it created this huge wick, right, and then the next candle is bullish, I'm like, you know what? I'm so glad I told you guys to close it out early because it was already leaving signs that sellers don't really have control at 9:30. Sellers are now trying to take control because it's 10:40, but at 9:30, sellers didn't have enough control, especially during opening bell. Buyers wanted that final push towards the upside because majority of the people were settling the market. Why? Because look at the big push from the market. Look at this. The market here has just been moving up, 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 up. Little ranging consolidation towards the upside. Boom, break towards the upside, moving up, 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 up. Okay, it's now reached the time that they're going to lose a little bit of control. Sellers are going to take a little bit of control. When that emerged to my head, I'm like, okay, sellers are going to take control. Since sellers are going to take control, at least the market will drop 200 points. Therefore, I'm going to enter a signal. But then when I saw right here that sellers were losing control and buyers were taking control again, I decided to tell you guys close early, close with 30 points in profit. And that's the end result. As you guys can see, the market went up for the final push to then ultimately now come down. Now, the market has basically, it has came down, but over the last 45 minutes, it's just been ranging in this area. And the reason I say ranging is because when you do this to the market, look at this. Not a lot going on. So I'm glad that I told you guys to close early, but this concludes on how we made 680 points and went 5 wins and 0 losses this week on TradersMrk.